Hey everybody, Bushel speaking for us. Welcome to the weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar for Feb 4 to Feb 8, 2018. So, commodity dollars have really been a very interesting trade this week because they've kind of gone each their own separate ways. And I think they're setting up for some very interesting trades next week, especially also giving us some opportunities for cross ideas, which I'll discuss a little bit later. But as far as the levels go, the commodity dollars did burst out with Aussie dollar now challenging the 73 level, which is a very, very serious resistance level. CAD, perhaps the most interesting of all. Oil coming back, Canadian economy sort of stabilizing, and more importantly, U.S. rates going down. Remember, dollar CAD really trades very much on differential between U.S. and Canadian rates. That has really compressed the differential and has helped Canada strengthen over the last couple of days. So now it seems to be challenging the 130 level, which we're going to discuss in a second. And yet the most interesting one to me is the Kiwi dollar, which I think is just ran out of gas here, the 69 level. So we'll take a look at all of those in just 1 second. But in the meantime, there is stuff on the calendar very much worth watching this week as far as com dollars go. So we'll start the Aussie retail sales coming out on Monday. That's going to be an interesting tell. We're mildly bullish that, given stronger manufacturing activity and trade balance. We'll see how that prints. Then into the middle of the week, we get a big number out of New Zealand. The employment data and the participation rate and the wages. All of that could be an upside surprise, which could bust my whole Kiwi dollar double top scenario. But in the meantime, I think the technicals are suggesting a very serious lack of momentum. And if this doesn't really show as strong a gain as the market is anticipating, I think we have a chance here for a very serious correction in the Kiwi. And then finally, into Friday, we're going to get the Canadian data. That'll be an interesting look. Right now, we don't have any estimates as how the market is looking at. But if that proves to be positive, that really, really drives the 130 story very much into the close of trade next week. So let's take a look. First, let's just start with the Aussie, because the Aussie is sort of the most interesting story here for me. Yes, we're clearly fading out above this 72, 73 level. What's interesting about this whole level, by the way, this is a gap fill level from December, right? We had a gap, and then we kind of filled that gap. Generally, when we get these kind of zones where there was a gap, you're going to get more resistance, even more resistance than in other typical technical points, simply because there was a lot of trapped traders here who are going to want to get out. And that's why I think you're seeing such a hard resistance at these levels for the Aussie. It's, we've had a big push here on U.S. yields coming down, but the U.S. yields coming down essentially, especially today. Look at today, where we're almost at 270 as we close the day. U.S. yields coming down could be sort of the end of the story. I mean, if 265 was the lowest we're going to get on a 10-year, it really takes the wind out of the sails for the Aussie trade, and that's perhaps what the market is showing us technically, that we've hit a top, we've hit a ceiling as far as the potential upside move here that on the Aussie that goes. Same story, and this is one I really like a lot, is on the Kiwi, because the Kiwi has this very, very significant double top at the 69. And we are backing off of it. I mean, today is just a day where we're really very clearly closing off the highs. So that leaves us also, remember, we're quite extended from the moving average. All of the technical signs are lining up for a potential correction to the downside. Now, if we close above 69.50, that completely invalidates the bear case, and it actually puts the 70, which is a very, very significant trade, back up in play. Possibly, if we get super positive New Zealand data and markets still trading a low U.S. yields, we could get that reversal. There's nothing on the horizon that makes me think the RBNZ is going to do anything but stay neutral for the foreseeable future. And if U.S. yields creep up to like 275, that's really going to take the air out of the Kiwi trade. So I think for us, the potential here is to the downside of 68 as we double top at these levels. Now, the one story that is different from the Antipodeans is the Loonie, which is doing much better and actually just shows a really, really strong move to the downside here. We failed, this was big corrective move, right? Reflexive rally, to the moving average, and then just a straight swan dive here. Now we are coming up into very significant support at the 130 level, so I don't think it's going to be an easy peasy move here, but between here and there, there's still scope for further downside action. And with oil prices pretty well supported at 55 here, look at this big move on the oil, 55 up here. Those positive flows really put the loonie as the dominant trade here amongst the calm dollars. It's another one of those cross ideas that we're going to talk about in the next video. So that's how the calm dollars essentially shape up. It really looks very toppy to me in the Aussie and the Kiwi the most vulnerable of all as far as the charts go. And it looks relative strength to the loonie as we start the week. Wish you guys the best luck, the best trading. Boris Schlossberg, over and out.